All right. Good afternoon, everyone. My name is Joe Bacella, Director of Client Success here at Chaikin Analytics, and I'd like to welcome you to Investing 101, How to Buy and Sell with Confidence. Our presenter today is Sandy Chaikin, co-founder of Chaikin Analytics. A bit about Sandy. With no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that outperforms the S&P 500 and most money managers. Sandy is living proof that you do not have to be a financial expert to pick winning stocks. She presents webinars and speaks at industry events on fearless investing by following the Chaikin 5-step method. Sandy is a contributor to NASDAQ.com, where she also hosts webinars on investing. Prior to co-founding Chaikin Analytics, Sandy had her own marketing and communications firm in a career that spanned over 30 years. She's held senior management roles at Elizabeth Arden, L'Oreal, and the Franklin Mint. She's a member of Elevate, a global professional women's networking group, and Women in Investing Network of Philadelphia. Throughout this presentation, please submit your questions through the GoToWebinar chat window. Michelle Greenblatt and I will be available to respond to your questions. And as a reminder, this webinar is being recorded, and we will send a copy of this to everyone who is registered. Now to get us started, I'll turn it over to Sandy.
Hey, Joe, thank you so much, and thank you all for attending today. We've got a huge registration. There's over 2,200 of you out there registered for this presentation. So thrilled with the outcome, and you all are in good company. So first, let me get out this little piece of housekeeping here about our disclaimer. We at Chaikin are not registered as a broker-dealer or investment advisor with the SEC or with any state securities regulatory authority. Chaikin Analytics does not recommend the purchase of any stock or advise on the suitability of any trade or investment. The information presented in this webinar is generic in nature and is not to be construed as an endorsement, recommendation, investment advice, or any offer or solicitation to buy or sell securities of any kind, but solely as information requiring further research as to suitability, accuracy, and appropriateness. Users bear sole responsibility for their own investment research and decisions. Okay, great. So I always like to get that out of the way, and then start with the issues at hand. Basically, volatility, which I know is top of mind with most of you out there, is not a recent phenomenon. Although we think this year has been highly volatile and it's kind of an aberration, it's actually, according to First Trust Portfolio, expected. And for the last 30 years, what they have, the annual correction has averaged 14%. And their kind of takeaway is that those who stay the course were rewarded more often than not. I know a lot of people, when volatility gets high, as it has been particularly in January and February of this year, tend to exit. They panic and say, "Oh my God, I got to get, I've got to sell. Everything's going down." But according to what First Trust is saying here, is that it's very common for us to have swings of over 14% a year. And when we do run, it costs us money, and it costs us money, because we really can't time the market. Nobody can time the market. So let's look at what's happened just in the last year with that 14%. So this is a chart of the S&P 500, and right here you can see February was the February 11th low, and at that point the market was 14% down from the May 2015 record high. However, what's happened since then is the market has gone up 14%. I mean, it's bizarre the way it works out exactly to the formula that First Trust is saying is the average. So this is right on average by these calculations then. And those who did stay in the market were most likely rewarded more often than not. So if you go to cash, you have to be right twice. And this is the dilemma. When you panic and sell, you sell at the wrong time, typically, and then you've got to know when to get back in. And, as the biggest stock gurus say, there's no one that can time the market. But let's look at another piece of kind of background information here in that 81% of actively managed mutual funds underperformed the S&P in the first quarter. And this isn't true just for the first quarter, but unfortunately, this statistic holds up over the last 12 years. So what this is saying is that 4 out of 5 mutual funds have underperformed the S&P 500 for the last 12 years, which is pretty sobering. So, my takeaway is that, stocks are really the only way we can invest and expect to grow our nest egg. The average stock return over years has been 7% on a conservative basis, 10% if you use more recently, back 10 or 20 years from now. But that's the normal expectation, whereas if you put your money in cash, it of course is 0 or -2 thanks to inflation. So what we're going to be going over today are some stock ideas. How do you find those winners? And how do you find them and buy them with confidence? I mean, confidence, I think, is such a key to our investing psychology. And if we don't have the confidence, we're not going to pull that trigger when we should, and we're not going to realize the gains that we can really experience. So Warren Buffett, the famous value investor, says investors should be fearful when others are greedy, and greedy only when others are fearful. So I love this quote, and it took me a little bit of time to kind of figure out what he meant when I first started investing a couple of years ago. But what he means is when others are running for the exit and selling, they're fearful. And that's a great time to buy because the prices are tamped down. Because of the oversupply in the marketplace, prices tend to be lower when people are selling. A lot of people are selling. And the time to be greedy, is when others are fearful and selling. The time to be fearful is when others are buying, because when they're buying, they typically read about something on the news, they hear about it on CNBC, they go, oh wow, that just reported a great earnings, I'm going to buy that stock. Well, at that point, it's up high. That's not the time to be buying the stock. So you basically want to go against the crowd. But how do you know how to do that? Well, my promise to you is you're going to discover in the next hour, the 5 simple steps so that you can find winning stocks and buy and sell with confidence. Now, thousands of investors have been making money with Chaikin Analytics, and that's what we're going to be looking at today, because those of you that are our subscribers and have been making money have realized the benefits you get from it, which are you're able to celebrate. You're able to have some money, put some money aside for your retirement, but also keep in mind what you want to spend that money on to celebrate. And what Mark and I like to do with my profits, some of my profits, is to go on some nice trips. We don't have a lot of time, so we're not able to travel as much as we'd like to, or as much as some of you are. But when we travel thanks to the profits that I've made at Chaikin Analytics. And as some of you know, because you've seen these pictures before, the top right is our 2-week vacation almost 2 years ago in Turkey, when we went over to Istanbul for a wedding, and then tacked on a week in on the Aegean, which is what you're looking at here. Last summer we went to Vail for a performing arts conference, International Performing Arts Festival, because I'm a big fan of modern dance. And this year, next month, as a matter of fact, we're going out to, we're taking a week and going to Rome at the end of May. Excuse me a second. So think about, as we're going through the slides today, think about how you want to spend your profits and how you want to invest your money once you've made these profits that you're going to be doing. So why should you listen to me? Well, as I showed you earlier, 4 out of 5 mutual funds, and the research bears it out on professionals as well, underperform the S&P 500 every year. And by the sheer fact that I've been outperforming the S&P 500 every year, that means I'm outperforming 4 out of the 5 pros, and as we've just seen on the previous slide, 4 out of 5 mutual funds. And I didn't invest in stocks until 2012, so I've only been at this for a few years. However, the last couple of years, I've been able to find some real winners and get in early and get out at the right time. Last year, for instance, I found was in and out of, and I'll show you this as one of my examples, American Woodmark, which was up 98% for the year. Walker Dunlap was up 64%, and ATVI was up 94%. Those were all stocks that I was in and out of last year. In 2006, I owned stocks like Atmos Energy, which is up 15% year to date, Bruker, which is up 19%, and Citrix, which is up 10%. And these are all in a market that's pretty much flat for last year and up about 2% year to date. So, as we all know, it's been a challenging market. But you can make money, and you can profit from earnings, and you can profit from the volatility, and that's what we're going to walk through today. And all this I do on 15 minutes a day because, like most of you, I work full-time, and my time is very limited. So I have to be efficient. So what I'm going to be showing you today, demonstrating to you today, are the steps that I actually take. You basically look over my shoulder, and I'm going to walk you through how I think through how to buy a stock, how to find that stock, how to know when to buy that stock, what goes through my mind when I'm evaluating it every day, because I flip through the stocks that I own a couple of times a day. And I only own 8 or 10 stocks at any given time, so that it's a manageable process. But these are all the things that we're going to be going through today. But first, just to put it in context, give you a little bit of background on how I started investing and why. And I think a lot of you will be able to relate to this as I share my story. So back when I was working in the corporate world for Elizabeth Arden, L'Oreal, and the Franklin Mint, the 70s, 80s, and 90s, they all had 401k plans, which I took advantage of. And in those funds, I could invest in a choice of mutual funds. And I was very fortunate in that one of the funds that the Franklin Mint, for example, offered was the Fidelity Magellan Fund, which was, I didn't know it at the time, but it turned out to be like the most successful fund ever. And like Mason, that was part of the L'Oreal 401k plan choices. Their Value Trust, which Bill Miller headed up, and that was another extremely successful mutual fund. So I got lucky and was in some good mutual funds. But as my career grew and as I got busier and busier and the fund got larger and larger, the 401k plan got larger and larger, I felt that it would be prudent to turn this over to a professional because, after all, I've been brought up to think if you have an accounting or a tax problem, you go to an accountant. If you have a medical problem, you go to a doctor. I mean, it made sense that if you had a financial need, you go to an investment manager. So on the advice of a good friend, that's exactly what I did. Engaged the professional, and then immediately what he did was sell the funds that I was in and put me in 8 or 10 mutual funds of his choice. And as you've just seen, 8 out of 10 of those funds, kind of mirrored the average of underperforming. So it wasn't a huge success. However, I didn't have the confidence to really challenge him and say, hey, should we be looking at something else? And then along came 2008-09, and of course everyone knows the financial meltdown that we all suffered through then. And my fund balance went down 40%. But before I realized that 40%, I was calling him back in like September of 2008 saying, hey, the market's down 500 points at that point. We thought that was bad. That was nothing compared to what was coming. I called him and I said, everything's looking like it's going to be tanking. Shouldn't we just sell these funds now? And the answer was no, absolutely not. Just stay in. They'll all come back, and not to worry. So I suspect a number of you have had this same type of situation, and if you could go into your chat window and just put yes, if you've had a similar situation to what I'm explaining here, of depending on somebody else who was not sensitive to your request, and you ended up kind of down in the hole. John, Virginia, Todd, Joan, Nancy, Annette, Maria, Stephen, Jackie, lots of yeses. Well, I'm sorry because I feel your pain as I'm sure you feel my pain. So I was in a dilemma. Now, I knew I had to do something, although I didn't know what that was, but what I did was I took it out of the professional scare and put it into I opened up a Vanguard account, put it into an S&P 500 fund until I could figure out what to do. And it was about that time that Mark and I were getting together. And so he could see me go through this kind of dynamic. I guess that's what you can call it. And he could see what was going on, and felt my pain as well. So that was really the wake-up call to me, and that really was the catalyst for me saying, boy, Sandy, you've managed every other aspect of your life, your career, your housing, your life. You've done very well with everything else. It's time to learn how to take control of your money, because here I've been working for all these years, 30, 40 years. I've been working, stashing the money away, and handing that money over to somebody else. And it was kind of ridiculous because I worked really hard for that money, yet I was not taking control of that money. And, that was my hard-earned efforts that went into that. So I was pretty devastated, but that really turned around and made me very firm in my decision to take control. And that's not to say that's what you need to do, but you need to be involved in the process. And that's the piece that I gave up and didn't take responsibility for. So rather than try to understand what the manager was doing and be a partner to that plan, I pretty much had just turned it over to him and said, okay, you're the expert, you take care of this. So we have many, many subscribers who work with wealth managers, and we have many wealth managers who subscribe to Chaikin Analytics, and the two can go hand in hand. It's the ideal situation is when you're working with a wealth manager is for you to be knowledgeable as well, and Chaikin can help you do that, and then that allows you to be part of the conversation and to monitor your stocks, and any wealth manager worth his or her salt would want you to do that as well. So let's kind of start with some challenges that you're facing. In the market today, they're saying it's the worst day since February 23rd. It's down over 1%. So today was a challenging day. What are the things that stop you from, say, buying a stock that you've been watching? What's on your mind when you're researching a stock and then you put it on a list and then you don't buy it, even though you might feel all of the parameters are lined up for it? Is it fear? Is it going back to that pain of 2008-09 of having lost money and fearful and of reliving that pain by making mistakes? Is it that you don't have the right tools, you don't feel you've got the right know-how of timing of when to buy or when to sell? If you all could just put that into your chat window there, that would be great. Todd, good for you. Manage your own funds now. Sandra's testing her conviction. Some of you are saying you're not sure when to get in. Information overload, that's a big one. Lack of time. Timing of when to pull the trigger, says Ness. Same with Greg, timing it right. Annie says confidence. Yeah, confidence is a huge factor for all of this. Hi, Annie, you're my best friend. Virginia, last time I used a broker was 2000, tech bubble, lost lots of money. Virginia, I'm sorry about that. Not able to get good returns instead of being in good stocks, says VJ. Lack of endurance, says John. Overtrading, says Maria. Inability to monitor the trade, says Brian. So uncertainty with global economies. I've always lost when I relied on myself. Okay, Hugh, we're turning that around today. So you get your pen and pencil out because that is not going to happen anymore. So I think I'm hearing a lot of the same themes here. That you're probably not making the amount of money that you want to. Is that a fair statement? Or let me rephrase it. How many of you are making as much money as you'd like to in the stock market? You know, put money, if you would, in the chat window if you're making money. Okay, I'm getting a lot of no's. No way, not me, not making money, no. Oh, money, all right. Frank and Cal are making money. Dean's making a lot. Hughes, no. Dan, no, not making as much. I feel I should, not enough. So clearly, we have a couple of, David says, what's money? We have a couple of you who are making money. That's awesome. Good for you. But clearly, I would say 95% of you are telling me that you're not making as much money as you'd like. So how would you feel if I was going to show you a proven step-by-step process to find these winning stocks and invest with confidence? Does that sound good? Because that's what I'm going to show you. Please do. Love it. Yeah, hooray. Love it. Okay, that's exactly what we're going to be doing. So, I mean it when I say take a pad of paper and a pencil out, because what we're going to go through is a simple 5-step process, and I've also kind of loaded up this presentation on a lot of stock ideas for you to follow, so that I'm basically handing you a list of stocks and saying, here, put this into your watch list, watch these with Chaikin Analytics, and wait for the right time to buy these stocks. And that's exactly what we're going to go through in the next hour. So I'm going to show you, I call it a dynamic duo. Mark calls the dynamic duo the Chaikin Power Gauge rating and combined with relative strength, which are both on the workstation, which we're going to go through. But my dynamic duo is combining the Chaikin Power Gauge rating with earnings, upcoming earnings. And we're in earnings season right now. So it's really particularly good timing to have these tools in your toolbox right now so that you can use them as soon as tomorrow. So get out that pad and pencil and get ready to take down some stock ideas. So yeah, everyone's in. That's cool. Donna, Darlene, Sandra, Nancy, all very good. This is great. Okay, cool. Well, that's what we're going to do. So are you ready? I think you're ready. So let's get into the meat of this right now and get started. I'll also preface this with just saying one final thing, that I'm really living proof that you don't have to be a financial expert to make money. I started investing in 2012, after that meltdown when Mark created the Power Gauge rating and these analytics. And prior to that, I had zero experience, and I've never taken a finance or an economics course or anything that had to do with the stock market. And I invested in mutual funds because I never felt, I was smart enough to invest in stocks. But believe me, you're all smart enough to invest in stocks. If I can do this, you can do it. And most of the examples I use in the presentation are from my own portfolio of stocks, either stocks I own, stocks I've sold, or stocks I'm considering. They're in my watch list. And you can make profits, even in this type of volatile market. So, okay, let's get ready. So our solution, of course, is the Financial Freedom Fast Track. And this is the system that I'm going to be talking about today and sharing with you. Chaikin Analytics, available on iPad and browser, as you see here. This has put me in control versus being fearful. And here are the 5 keys to buying and selling with confidence. To first, use a methodology that you trust. Know what to buy, know what to avoid. Take advantage of earnings. Instead of being fearful of earnings, I'm going to show you how to be confident and conquer earnings. And then, of course, knowing when to buy and sell. Excuse me. So let's look at number one key, trust a proven methodology. Well, for us, it's the power gauge rating. You've heard me reference that just a minute ago, but this is a model. It's basically very simple in its output. It goes from very bullish to very bearish, but there's an awful lot going on that meets the eye. It's made up of four components. This is a model that Mark created after spending 40-some years on retirement. And what he did in his 40-some years on Wall Street was create tools for professionals so that they could make better choices for their clients. They could trade better in stocks for their clients. So he knew exactly what the pros use when they're evaluating a stock. There's over 200 and some indicators that he started with, and he boiled it down to these 20. And the reason he created this was for the people like me and like many of you who had really been devastated by the financial meltdown, had gotten distrustful of Wall Street, had taken our money out of traditional brokerage firms and set up independent accounts like I did at Vanguard. We were managing our own money, yet we didn't have the tools or the knowledge to do it. So Mark said, after spending some 10 years or so in retirement, he said, I'm going to take what I learned on Wall Street, and I'm going to create the best tool I've ever created and make it easy enough for individuals like you to use. And that's exactly what he did, and that's the power gauge rating. So he whittled down from a universe of over 200 factors, he whittled it down to these 20 factors here, broken down into these four components. Now, many of you say invest the way, say, a Warren Buffett does. That would be financial metrics. That would mean you would put particular emphasis on these 5 factors that are part of financial metrics. Earnings performance is a big kind of flag for Jim Cramer. That's what he really emphasizes. So if you're a Jim Cramer type of investor, you might want to focus more on earnings. The 3 that are highlighted here in red are the 3 that I feel are most important. And you can get a rating, as you can see here, on any of these 4 major components. You also, by clicking on any one of these 4 components, you'll drill down and get a power gauge rating on any of these 5 factors that make it up. So you really can go into information overload if you want. You can keep it simple, or you can just drill down on 3 like I do here. And I'm going to give you examples of how I've done this and the stocks that I found doing that. Because who has time? We're faced with information overload, but we don't have enough time, to get through it all. So we get many testimonials, and Cheryl says here, there's not enough time in my day to do the work Chaikin puts before me in minutes. I am wound. And we hear this repeatedly, that it's an enormous time saver. Wealth manager at Morgan Stanley who uses this thanks us for giving her back her weekends. She said she used to spend all day Saturday researching stocks, which she now can do, in 15 seconds with Chaikin. So it's a real time saver. Another reason we want to rely on a model like the Chaikin Power Gauge is that it's not emotional. I mean, who's been guilty of trading on emotion, like seeing a stock go down and panic and selling? Of course, we all have, right? I mean, that's why it's so great to have a model to depend on, because rather than depend on your emotions, you go back to that model. And as James O'Shaughnessy says here, models beat humans, because they're reliable. They use the same criteria as opposed to humans who are swayed by emotions and opinions. So, you got to take the emotional factor out of it and look at it from a very analytical way, and that's what the power gauge allows you to do. So why should you depend on the power gauge? Well, because we've done back testing in real time and back testing in model performance as well as real time. That's what I meant to say. And if you looked at the last 16 years or so, if you were only invested in bullish stocks each year, you would have an average annual return of 20%. If you only invested in very bearish stocks, you'd have an annual return of -1%. And of course, neutral is 6%, which more or less mirrors the average. of 7%, which is kind of the standard S&P average uh, figure that most people use when they're looking at an average for the S&P 500. So in addition to that, we've created indexes for NASDAQ and a portfolio for First Trust. NASDAQ came to us several years ago, having tested the power gauge rating when they were intrigued with it. And they said, we'd like you to create indexes, taking three of the indexes that we have, overlaying the power gauge rating, and then filter out the bearish and the neutral stocks and see what happens with those bullish stocks that are left. And for the 2 years that these portfolios have been in existence, the second year just eclipsed on April 1st of this year, the Chaikin indexes have outperformed their benchmarks by a wide margin. So last year, First Trust, which is the largest provider of unit investment trusts, which are like mutual funds, came to us and say, hey, we're kind of interested, having seen these NASDAQ indexes, interested to see if you can create a portfolio of stocks for us based on the power gauge rating. And so that's exactly what we did, and that was launched in December, and Mark's actually been on the road all week up in Albany. Is anyone here from Albany, Buffalo, and Rochester? Because Mark's been up there all week. He just got back this morning, but he's been going out with the First Trust wholesalers to their clients, the money managers, and then the money managers then learn about the Chaikin First Trust portfolio and have been buying it for their clients. So this is the first time individuals have been able to invest in a portfolio of stocks based on the power gauge rating. So let me just see if anyone answered me is from Albany or Buffalo. Virginia's asking if this is recorded. Yes, it is. John says those locations are all too cold. I totally agree. Okay, so I guess we don't have anyone from those regions with us here today. But in addition to being validated by NASDAQ and First Trust, it's used by some of the biggest pros in the industry. Paulson Hedge Fund, Soros Hedge Fund, Fidelity Investments uses it. We've been written up in all of the major financial publications. Mark's quoted weekly on CNBC.com in Evelyn Chung's column. So that should give you some comfort that the power gauge is reliable and you can depend on it. Can you depend on it 100%? No. I mean, if there's anyone that tells you that this is hard, fast, true 100% of the time, run the other way, because there honestly is no such thing. So before I go on to knowing what to buy and how to pick the winners, can I just take a little poll here? And if you can just type into your chat box, please, if you're understanding the power gauge rating, because the power gauge is the foundation of everything I'm going to be talking about for the rest of the hour. Okay, great. Lots of yeses. You guys are smart. See, you can do this. I would say if I can do this, you can do it too. So that's awesome. Okay, great. Thank you. All right, so how do you know what to buy? That's probably everyone's biggest conundrum. Well, we call it a classic bull. These are the patterns you want to look for when you're looking for a stock. And let's just, for example, blow up this chart. Atmos Energy. This is a stock that I own. Now, this is a chart from the Chaikin Analytics iPad application. Down here, you'll see the power gauge rating. This ribbon along the bottom, it's 1 year. You can also flip to a 5-year chart if you want to see more of a pattern. And as you can see, the power gauge rating has been bullish since August of last year, persistently, with a little bit of a tick to neutral. That's pretty darn good. Relative strength has been really strong. Now, why is this important? Well, this measures in this really easy to read heat map whether this particular stock is out or underperforming the S&P 500. I'm going to repeat that because it's really important. This relative strength heat map measures whether this stock, Atmos Energy, is out or underperforming the S&P 500. And guess what? If it's green, it's outperforming. If it's red, it's underperforming. Easy, right? This up here, money flow, does the same thing. Red, green. I mean, really, unless you're colorblind, you can do this. Red means money is coming out of this stock. Green means money is coming into the stock. This measures institutional money in and out of a stock. And this is one of the technical indicators that Mark created 30-some years ago and has basically made his name on Wall Street with this. It's in literally every charting package worldwide. You're not likely to find a chart on stockcharts.com or anyplace else that doesn't have the Chaikin money flow, or CMF as it's often referred to. Why is this important? Well, it's really important because, well, let me back up a sec, because to understand the way a stock price moves, you have to look at it in a different view than the way I've been used to looking at in consumer products. At L'Oreal, at Lancome, at Elizabeth Arden, when you sold a bottle of perfume, it was, say, $100 an ounce. And it was $100 today, it's $100 3 months ago, it'll be $100 in the summer. Obviously, we all know that's not the case with stocks. So why did the price move? What moves the price? Well, it's supply and demand. And supply and demand is measured by Chaikin money flow. Because when institutions are buying, and this nice big green chunk of change in here, look at the price. It tends to go up because there's less available. If they're selling, they're dumping stock onto the market, there's more inventory on hand, which means there's less demand and the price is lower. I mean, think of it like an auction. You know, you're only gonna buy up to a price where you have to. And if the institutions are buying it, you know, they're gobbling it up. So you've got to get in there and bid against them for that stock. So those three things are what you want to look for, as well as this orange line, which is a 200-day moving average. And what this does is tell you the direction the stock is headed. So you can see you want this to be on an upward movement. I want to make sure that I did clarify that what the power gauge rating does is it looks at where a stock is headed 3 to 6 months out. I may have forgotten to say that, but that's really important to understand. What does it do? It looks at a stock. Think of it as a GPS for stocks. It tells you where that stock is headed 3 to 6 months out. Can you depend on it? Well, I say you can do your own testing. Look at any stock chart I'm going to show you. And as you can see here, when it turned in August, what happened? The price started going up. Prior to that, when it was neutral and the relative strength was negative and there was money coming out of it, the stock was either going sideways or down. So you really can look at it and do your own testing as to whether you think this is reliable or not. And that's what I do when I look at any stock. So this stock is up 15% so far this year. I just bought it back here on this little buy signal. These are signals I'm going to point out along the way on our charts. We have 6 pairs. You can overlay them here. I've overlaid this oversold buy, which is telling me that this stock is in an oversold position. And this overbought, oversold position, you don't even have to know what it means. All you have to know is that you want to buy a stock when it's dipping down, and when it's dipping down, you're very likely to get a trigger like this with a buy signal. You want to sell a stock when it's up high, because this typically correlates to a peak. So if you look at this chart, for instance, there's that peak, then it comes back down again, which is here, then it goes back up again, but now look what's happened. It's kind of trailing off, and that's what's here. So you want to buy it when it's down here. That's called oversold. You want to sell it when it's peaking up. This stock had been on my watch list. I had it on my watch list since the end of December, sorry, at 64. I should have bought it earlier. But what happened was it's in the utility industry group, and those industry groups that had anything to do with utilities became very strong in January and February. And that is typically what happens when there's uncertainty in the market, as there was in January and February, when we're seeing these wild swings every day, people kind of go into the defensive mode, and utilities are their defensive stocks. So these became quite popular, and you can see that you can see the result of that. A lot of money went into it, and the price goes up. It's pulling back a little bit now. The stock reports May 4th. So far, I'm confident that it's as good a chance as any to have it's a better chance than most to have a good earnings report because everything's green. But we'll see. I have time on my hands. I don't have to make that decision until May 4th. And if I see these things trailing off before earnings, I could sell it. If I see them still strong, that tells me this has a really good chance of beating analyst estimates and just, hold on for the ride. Here's another example of a classic bull. This is a stock, NCI Building Systems. I just bought this really the other day, last week, for April 21st. And why did I buy this? Well, building has become very strong. As the real estate market has strengthened, stocks in the building categories have kind of pulled out. You can see what happened here. This is the power gauge rating telling you where this stock is likely to head. You can see it's neutral here. Relative strength has been really negative up until early March. Money flow has been mixed. But you can see what happens when you've got a negative or a neutral power gauge rating, a negative relative strength, negative money. What tends to happen is the price goes down, which is exactly what happened here. Oddly enough, they did report a better than expected earnings, and it spiked up a little bit, and then things started to turn around. Money started to come in. They got another positive earnings. And so look what's happened to the 200-day average. It's now on an upswing. So this is not a stock I would have bought back in here, even though I did get some overbought buy signals on it, which correlated nicely to a dip. But I didn't like this overall picture. I want to wait until everything really lines up and is good to go. And that really didn't happen until March. And then I typically like to watch it for a little bit longer and wait for a buy signal, which is exactly what I did. I got this buy signal back in here, and bought it at, let's see, I bought it at 15. It's now still about 15, but it's reporting June 7. So if you're taking notes on stock ideas, do you think this is a good one to put on your list? It has a strong power gauge rating, very strong relative strength. It's oversold right now. And you've got another buy signal right there that's saying, hey, if you're thinking about buying it, now might be the good time. And money is very strong. And it's in a very strong industry group. The stocks universe have been divided into 65 industry groups by Zacks. And then we rate they bucket each of those stocks into an industry group. We rate those industry groups based on the power gauge rating. So if there's a lot of stocks with bullish power gauge ratings in an industry, that's going to rise to the top of our list. And that's exactly what's happened with the building industry list that you see right here. So would anyone like to does anyone see this as a good candidate for your watch list? Do you offer subscription to your website? Yes, Virginia, we're going to go through that at the end. I'm going to give you a special offer. In upper right-hand corner, screen trend strong over what period of time? That's a good question, Ken. I'm not sure how much over what period of time that means. Okay, so investors, what's the difference between your system and Investors Business Daily, says Christine? Well, Investor Business Daily uses Mark's money flow. But I think they only use one or two other factors, whereas we've got a 20-factor model, as you can see here. So you get a lot more research at your fingertips. Okay, great. So I've got to move along here. This is the longest section, by the way, the bulls, because I figure that's what always gets people's interest. They want to know what to buy. So here's another classic bull. I don't own this stock. what do? Well, they manufacture engineered products. If you want to know what a stock does, you go into this little info button here, and it gives you a little paragraph of what they do. So this stock has been on my watch list. You can see here's another nice triangle, a buy signal, momentum breakout buy signal, just the other day at 36. And you can see the stock is going up nicely. Let's look at how these all line up. Power gauge rating right now is strong. Went from neutral in early March. Same with relative strength. It's now outperforming the S&P instead of underperforming. And there's a lot of money coming into the stock right now. Now, even though it triggered this momentum breakout, the stock is not oversold, right? So it would have been nice to have bought this back on this dip back in here, or wait until the next dip. And so that's why this is remains on my watch list. Now remember I told you there were 3 factors that I look at, I drill down on. I'm showing you 2 of those right now. So I drill down here on the expert opinions, one of the 4 components that make up the power gauge rating. And then you can see a power gauge rating for each of the 5 factors that make that up. Short interest is very bullish, which means that short sellers are not betting the stock's going to go down, so that's a good sign. Insiders are kind of neutral. I like a stock, if I'm going to buy it, for that to be over in the bullish camp, which means insiders are buying a stock. The only reason they buy a stock is because they think that price is going to go up. They may sell it for a number of different reasons, but there's only one reason to buy a stock, and that's because they think it's going to go up. So if insiders are buying, I'd like to know about that, and that's what this factor does. So that shows you 2 of the 3 that I drill down on. All right, so how do I find these to put them on my watch list in the first place? Well, we've got just recently launched in November a screener. And what this allows you to do is take the stock universe of 5,000 stocks, and you can basically request any of those factors of the power gauge rating plus any of these technical indicators like money flow and relative strength. You can put those criteria in here and screen for stocks that fit that criteria. And that's exactly what I did right here. So you can see I'm only interested in stocks that are in strong industry groups. I might as well go with, the wind at my back, as we say. I only want stocks that are bullish. So I'm already from 5,000 stocks, I'm down to 406. Now I take those 3 factors that I told you I feel are important. You might feel other things are important. Or when it's earnings season like it is now, you might want to put in candidates that have strong earnings potential and run a screener that way. But I want these all to be strong. So I've gone now from 406 candidates down to 44. And then I say, well, not done yet. Part of that criteria, remember the classic bull has to have strong money flow and strong relative strength. So now I'm down to 14 stocks. I had to kind of cut it off because to fit it in here in a size where you could read the fonts. But there were 14 stocks on this list. I can then just, with a click of the button, put them into a watch list, and then I can scroll through each of these 14 stocks. Now I'm pointing out NACO Industries because I'm going to drill down on that, and I'm pointed out NCI Building Systems as well, because we just talked about that. That was one of my examples for a classic bull, and that had been on the screener back in April 7th or so. So I had it on the screener back then, and then it came up again on my screener when I ran it this week. But I had added this stock back. This is a screener as a 426, but see, when they start kind of overlapping each other, then it gets interesting, and you go, oh wow, there's that stock again. So that kind of pulls that one up to a higher probability in my mind. And that's the way you can kind of whittle your watch list down and prioritize it. So let's look at one of those other examples, NACO Industry, that was on that screener. They manufacture forklift trucks and small kitchen appliances. The industry group we can see right here is strong, and they're in the strong home furnishings and appliance. And if building is strong, it stands to reason that so are furnishings and appliances, because if you're building a house, you put in appliances, right? So those kind of go hand in hand. This stock reports earnings on May 4th, and I flipped over to a screenshot here of our browser. So the same information that you saw on the iPad is available on the browser, and this is what it is here. But we do have this earnings overlay. Unfortunately, there isn't any earnings data available in our system for this particular stock. But let's look at whether this is a good candidate or not, because they are going to be reporting. When do they report? May 4th. Yeah, a couple of weeks from now. And there has been this recent momentum buy signal right here. This just was triggered the other day at 60. So is this a good candidate to buy before they report May 4th? Well, looks pretty good to me. Strong power gauge rating, very strong relative strength, strong money flow, and it's telling me right now it's undersold. So, this is a good candidate. So if you got that pencil and paper handy, put down NC. It's got a very bullish power gauge rating, and it's got everything going in its favor. So this is a good one to keep an eye on, and possibly buy it soon, before they report May 4th. But that's how I use it, and that's how a lot of our subscribers use it as well. Jim here says, as of yesterday, he's made enough to pay for the annual subscription, so the rest of the year is just gravy. He's a small-time investor, and he just started trading actively last year. He's up 54%. That was as of January, and that's only been in 5 weeks. So, as I say, we get a lot of these. Michelle and Joe get these emails practically every day. This one is from Eric. He's been using Chaikin for several weeks. You can quickly and clearly see when to go long or short. He's already closed out 2 trades of gains of 70%, 115%. Over the years, I've tried different software packages and programs. Chaikin is by far the most straightforward analysis product I've ever used. So you don't have to take my word for it, but this is what our users are saying. So the classic bull I'm combining now with earnings season. I'm moving on to step 3, and that is to take advantage of earnings season. So just a quick overview of actually what it is. Companies that are publicly traded are required to report their earnings every quarter. You can see that up here. And we're obviously in April. And Wall Street analysts and professional investors go over these reports, with a fine-tooth comb. And the thing that's always interesting to me is it's not so much how are they doing against last year or last quarter, but it's how are they doing when the actual report comes out compared to the analyst estimates. I mean, that's the $64 question. Because if they outperform the analyst, the stock tends to go up. If they underperform what the analysts are estimating, they tend to go down. So it's not so much against any real criteria other than what the analysts are thinking. And the other thing to consider is guidance. Now, this is the wild card. And there is, unfortunately, no way to predict this. And this is what can cause earnings to be very volatile. But remember, volatile can go up and can go down. Guidance is looking out in the future, and a company is required to say what they feel that guidance will be. So if they say, well, gee, everything's really going in our favor, we think we're going to have a really good year next year, or into the next couple of quarters, that's obviously good, but likewise, if they are seeing some thunderstorms ahead, they are required to state that. And even though they could beat analyst estimates up here, if they report poor guidance, and sometimes it's really buried and hard to find, that can be the real wild card. So, there is risk, no doubt about it, but in my experience, the rewards have outperformed the misses. So there is big price moves. The key is anticipating if a stock is beating or missing, and that's looking at those indicators that we've been looking at, and to identify the likelihood that that stock will beat or miss. But the the goal at the end of the rainbow is that you can really make some really nice big profits. So let's look at a couple of them examples right now. And I'm using Knoll because I just bought and sold this last week. I held it for as little as like 18 hours, and I made a 6% profit. And that's the beauty of trading during earnings. Some stocks like this I'm in and out of quickly. Other stocks I'll hold for a long time, like Southwest Air, for instance, or Skyworks. Over the years, I've held those for like 6, 8, 10 months at a time. So it depends. Now with this stock, I bought it. I had it on my watch list. Again, it was in that strong business products group, which is like 11 out of the 65 groups. All of these indicators pointed to an earnings beat. Can you see that here? I mean, look at that huge money going in there. Positive relative strength, persistent, just in the last month, but persistent power gauge rating. And this price was up at the peak, which is not where I like to buy, but I had to take that into account, the fact that they were reporting earnings the next day. And I felt this was, with that strong money and strong relative strength and strong power gauge, I kind of suppressed the importance of the overbought, oversold, and said, well, I'm just going to buy this because I think this is going to be going up. And fortunately it did. They reported earnings that evening. I bought it on the 21st, and they reported that evening. Stocks spiked up in the morning 6%, and I sold it. So I made a nice 6% right in here for just holding it overnight. That's where you can take advantage of earnings. And this is my testimonial, so I can have testimonials too, and this is my 6% profit overnight. When I scroll through my stocks in the watch list, I saw Knoll was reporting that night, bought it, power gauge and all Chaikin indicators were lined up, anticipating an earnings beat. I sold it this morning at 24, 6% profit overnight. So I can have testimonials too. So another one with a similar situation where I took advantage of earnings recently was Citrix. This is the software we're on right now. Go to webinar. This stock, actually, I had bought back in here at 77. And it had been on my watch list. And then I got the overlay here. I wanted to show you the more recent buy signal here, which is a money flow buy. But back in here, I had a different buy signal. I had a relative strength buy signal. So I bought it back in here on that. And then I owned it. I got another buy signal in here. And I knew from this overlay, this is the overlay we have new in Chaikin, that you can, it's like, makes earnings season so easy to predict and identify. But this is telling me that this stock was going to report earnings April 20th. Yeah, the type is small in here, but it reported April 20th. So I was watching this, knowing that they reported, and it spiked way up. So I thought, oh, that's cool. So I sold half my position, taking an 8% profit, and I kept the other half in because I felt everything really nicely lined up. Strong power gauge rating, strong relative strength. Money flow has since come back a little bit, so I'm watching this a little bit more closely, but it's pulled back to 83. That typically is what happens on earnings. They shoot way up the first day or so, and then they typically pull back. So I'm not shy about selling, and if I really like a stock, buy it back at a lower price. And here's my testimonial from Citrix. Sold Citrix yesterday after they reported better than expected earnings the night before for an 8% profit. Bought it months ago on a Chaikin relative strength buy signal. So these are all actual stories, real trades that I've made as recently as this week. This stock, United Health Services, I don't own. but it's in the strong healthcare sector, and that's been strong now with Hillary supporting Obamacare, and we're into what, a couple of years of Obamacare. So um, they reported very positive earnings just yesterday, and you can see from here that stock went up 3%. So you can see, looking at this chart, it was on my watch list, but it never triggered a buy signal of any sort. So it kind of missed my radar screen there. But look at this nice setup. I mean, this is still a good stock to get into on a pullback. Strong power gauge rating, very strong relative strength, very strong money flow. I mean, you might want to put this one, UHS, on your watch list too. Write this one down and wait for this to pull back. And once it pulls back to an oversold position, since they've got everything so nicely lined up, and if they continue to have that nicely lined up when it's oversold, you might want to pull the trigger and get in on a nice move, because it looks like the price is starting to trend up again now, right? See, here's the 200-day moving average. Not so great until April, but it is turning around. That's the way I read a stock. And this tells me it's reported April 27th, and it's going to be reporting 3 months from now. So I don't have to think about earnings for the time being on this one. Now, it's not always a perfect system. Has anyone told you that the stock research they're selling or promoting is perfect and you'll be right all the time? If they do, believe me, run the other way, because there is no such thing as that. So, as we all know, there is risk involved in investing in stocks, and there is volatility, particularly around earnings, and sometimes it works against you. So this time it worked against me. I bought Disney right before they reported earnings back here last August. Everything was green, nicely lined up. I thought, oh good, going into earnings, this is going to be a positive move, and it'll probably spike up. And unfortunately, the reverse happened. In the interview, it was the oddest thing. It wasn't so much the report itself, but in the interview, the head of Disney said something about the subscriptions declining in answer to a question. And look, it went like kerplunk. Dropped 8% to 110. So, that wasn't so good. But fortunately, this happens fewer times than the good things, and they kind of more than even each other out. But I did want to share that with you, because it's not all perfect. All right, I'm going to move on to what to avoid. Is that okay? Is everyone good with the earnings section to keep marching forward and show you how I know what to avoid? If you can just type in like go or something like that, I'll make sure everyone's on the same page. So can you see yourself doing this? I mean, does this look like something you can do? I hope so. And say, yes, you can do it. If I'm showing you enough now that you feel confident from what I've shown you that you now can pick a classic bull, say, yes, I can do it. Come on, show me those yeses. All right, Sandra, Annie, awesome. Mark, Ed, Ronnie, John. Okay, yes, see, say, yes, I can. All of you, put that in. You can do this. Elton says it works great for the past month using it. That's great, Elton. Maybe type in for Joe what a specific example. He'll call it out to us. That's just great. You can do it. So please say, yes, you can, because you can do it. Honest to God, if I can do it, you can do it. All right, so here's what we need to know to avoid and not get in trouble. And this is obviously the reverse of the classic bull. So let's go to a bigger view of this so you can see. Okay, this is a disaster. I mean, can everyone see this as a disaster? It's pretty simple to see. Red, power gauge rating persistent for practically a whole year. Terrible relative strength. I mean, if you're not going to buy a stock that is better than the S&P 500, you're better off putting your money into an S&P 500 account, like like SPY, like the Vanguard S&P 500. Just go into an index fund if you don't want to outperform. But if you want to outperform, you don't want to own a stock like this unless you're unless you're an options trader. Options traders can really profit from loser stocks like this. But look at this. I mean, can you see how this is not a stock you would want to own? They just reported this week it's down 16%. I've kept this slide up because this was from yesterday, but I wanted to show the 16% in the window here. But look at the warning. I mean, hello, this is going down, everything's red, and these red triangles here are sell signals saying get out, get out, get out. So it makes it pretty clear. As I say, if you're trading options, this could be a real boom because you can use these to bet the stock's going down, and this could give you really good confidence. So just yesterday, 4 of these really highly visible stocks reported, and they dropped an average. They each dropped an average of 10%, Apple being one of them. I'm going to show you a couple of those today. We just looked at Twitter. We're going to look at Chipotle, Apple, and Buffalo Wild Wings. I'm not going to show that example because I think the point's been made. But those were 4 highly visible stocks that all reported just yesterday with bearish power gauge rating, and they all went down. Now, we've been bearish on Apple just for the last week or so, but look at the relative strength. It's been underperforming since really last July. Money in and out, a little bit of in, but now out. And knowing that going into earnings season, knowing what you know now, I know Apple's still the most popular stock to own. But looking at this chart right now, if you had owned Apple, would you have sold it before they reported earnings on the 26th? Just put sell, if you would, into that question box. And then I'll know that you're really understanding and reading these charts as easily as you can. Everyone's saying yes. Sell, sell, sell. Ronnie, Ed, Michael, Elton. Yeah, great. Okay, cool. Awesome. So, I mean, that's as simple as it is. You see this lineup, and you say, I'm getting out before earnings because it's most likely that the stock's going to go down, and of course that's what it did. So let's look at Chipotle. Well, that's been in the news for more than a couple of months now because of the terrible problems they've had with Ebola breaking out at some of their stores. I mean, talk about a PR nightmare. Yikes. So things were not looking good going into it. Look at all the red here. Red, red, red. Red sell signals. It's telling you the detail here that they disappointed the last couple of years. And look what's happened. That stock was down 28% yesterday morning after they reported the night before. 28%. So rather than watch your profits erode, this system would say, hey, get out of this beforehand. I said a lot of people trade options. This is exactly what Harry did, and he's probably on today because he tends to come, thankfully, to every webinar. We love you, Harry. But he said early February he's up over 17,000 just with options trades on Google, Amazon, and Priceline. It's all from checking the power gauge rating. It's a godsend. I've been a subscriber for not even 2 weeks. You've changed my life. And Harry's been loyal ever since. And Harry, if you're on, give Joe and Michelle some more of your wonderful examples. They'll call them out and share them with our friends on the webinar. Okay, so that's in a nutshell what to avoid here by sell signal. I'm not going to spend time on these because I've been pointing them out all the way, but these are the 6 pairs. How do you find them? Well, guess what? We make that easy. You have this little bell overlay on any chart, any list rather. This is the watch list I keep. I'll tell you a little secret. I just keep a list of stocks I'm watching, which is right here. and I keep a list of stocks I own, the 8 or 10 that I own, and then as I'm rolling these up and looking at considering buying one of these, I'll go into a free app that I have, CNBC Real Time, and see what the news stories are about it. I'll also go on to Yahoo Finance and plug in that stock symbol and see what the news stories are. And that's my research. That gives me enough information to know whether I want to buy or sell that stock. But this is great. I have this overlay on my watch list every morning, every night. These signals are updated nightly. And as you can see here, it's telling me that Comcast and NXPI both triggered buy signals today, where Celgene, which reported a disappointing earnings, but this would have warned you, they actually disappointed after the close tonight. But this was done yesterday, so I would have been forewarned if I was considering buying Celgene that there's a sell signal on it. It also tells me if power gauge ratings have turned a different color, and also tells me if that price has gone up or over that 200-day moving average.
Hey, Sandy.
Why is that important? Yeah.
Sorry, I just wanted to chat in. I saw that you know, some people have been chatting in regarding how their recent trades have gone with Chaikin Analytics, and one of our
Great.
favorite subscribers of ours, Neil, chatted in saying that just today he made about a 40% return with a put vertical on Cavum. Looks like they reported earnings recently and dropped about 10%. And Neil was able to make 4 times that amount of a move, which is great.
Neil, great job. Joe explains in his presentations that he gives every week to our subscribers how to use the options play. Obviously, we don't have time to go over it here, but we do have an options component that overlays onto our charts that gives you these options of options. And, and that's exactly what Neil has done. So that's awesome. Thank you, Joe. Is there another one? You said you had a few?
Let's see, I'm digging through a lot of them right now. I'll make sure to
Okay.
check back in a
Okay.
few seconds, though.
Just check back in when you get them. So Neil, good for you. That's fabulous. Congratulations. Glad you're making money. Okay, so how do I know when to sell? Well, it's much easier getting into a stock than knowing when to get out of the stock, don't you think? I do. But these are kind of my rules. Power gauge turns neutral, and another indicator like relative strength or money flow turns negative. Certainly if I get a sell signal, and if the price drops below that orange line, and that's what I know in those alerts. I know that because it'll alert me when a stock has dropped below or above an orange line, which is that long-term trend line. Or if the price drops by 10%, and that's just something I kind of keep mentally. I don't put any stops in. I think they've been actually they've been taken out of the trading system after that whole problem back in August of triggering one triggered the other, which triggered another, and that was that whole cascade back in August 24th of all those stocks falling down. But this is a good example of not only when to buy, but when to sell. And I thought I'd use this here because it's really kind of bundles in earnings, when to buy, when to sell. It takes everything into account. So let me just quickly run through this. As you can see, I've overlaid our earnings overlay on American Woodmark. And this is one of the stocks that I've kind of invested in sometime for short trades, sometimes for longer trades. But back last April, over a year ago, this was on my watch list. It's earlier than this chart reflects here, but I got a buy signal, an oversold buy signal at 54, so I bought this stock. It went sideways a little bit here. Then they reported earnings, and it popped up, and then you can see money started flowing in, which was good. Got another buy signal here. Reported earnings again over here, and earnings beat the estimate. So I sold it here. This was back last August at 67. I bought it at 54. I sold it at 67 right after the open when it popped up, and it hit this upper volatility band. So this is one of the criteria for when to sell. These are volatility bands that Mark created. I don't know how he created them, but if it pops up above it, it's a good time to consider selling that stock because that's a high for it. Likewise, if it crosses this volatility band down here, it's a good time to consider selling that stock. And same with this 200-day moving average, this orange line here. You know, if it goes up above it, it's a good time to consider selling it, take your profit. And if it falls below it, like it's done here, this would have been a great time to say, hey, party's over, I'm getting out of the stock. So that's kind of how I explain those volatility bands. But going back to American Woodmark, I really like this stock. It stayed in a very strong industry group. And as you can see, everything pretty much stayed strong here. A little bit of sideways action when money flow went negative. But then it all lined up again, and I thought, oh man, they're going into earnings again next week. I'm going to bet, looking at these line up here, that I could see that this stock was going to have another positive earnings report. So I bought it again. Bought it back here in early November, and I sold it about 10 days later when it spiked up again after they reported earnings. It spiked up 20%. And it hit 90. It went above this volatility band. So as I say, I like to sell them on those spikes. This one actually kept going. I could have held it a little bit longer and made more money. That typically doesn't happen. It's usually 1 or 2 days and it spikes up and then it falls back again. But in any event, I was happy. I took my profit a second time. You know, I made 25% here in 2 weeks. I made 25% here in 3 months. And I was happy. You know, and then you see the money started flowing out, and then look what happens. When these things neutral, negative, price drops big time. Interesting enough, it's just turned bullish, and they are going to be reporting in June. You know, so I've put this back on my watch list now that it's bullish. I'll see if these other things, you know, if relative strength turns around and it starts trending up again, this could be another good candidate to buy before June 7th. But that's, you know, that's kind of the methodology that I go through. So again, you might put this on your stock watch list, AMWD. They report June 7th. You know, keep a watch on it before June 7th, see what happens. Another stock I sold, and then we're going to kind of end the session, is I'm going to end with a special offer. So stay tuned if you're not already a subscriber, because we want you to be able to make profits like this yourself. I had bought this stock, SkyWest, a couple of months ago, and I overlaid the money flow by signals here. You can see I got a couple of signals here, but I already owned it, and not on earnings or anything. They just spiked up 6% a couple of weeks ago, April 13th. Hawaiian Air and Virgin Air were in buyout situations, and now they announced buyouts, and some of these other airline stocks just shot up kind of in quote sympathy. So I said, great. So I took my 6%, you know, I said, thank you very much. I sold it. But, you know, this again is a stock that I put back on my watch list because the transportation and air is now a #1 industry, and it's benefiting from these low fuel costs. It actually reports tonight, the 28th. So I haven't, because I've been on this presentation, I haven't gone to see what they've done, but it'd be interesting if someone wants to take a look and see what SkyWest did, SKYW, see if there's any news out on their reporting. If you go into Yahoo Finance and put that symbol in, it should be able to show you that. All right, so let's recap the 5 keys. You know, the methodology, you need to use a methodology you trust, which is the Chaikin power day trading. Know what to buy, that's the classic bull. Take advantage of earnings with that earnings overlay. Know what to avoid, that's the classic bear. And know when to buy and sell by using the buy-sell signals in conjunction with that alerts view, so you know when they're triggering. And take control. take control. You now have control of your financial future because you can't even depend on the pros. Even Jim Cramer gets it wrong. This is a stock he'd been talking about. I mean, this is just from April 14th. What's that? 10 days ago, 2 weeks ago, I guess. And he was touting up until then Energy XXI. If anyone had been following this on Chaikin, you would have never been bullish on this stock, looking at all the red. But Jim Cramer doesn't use Chaikin. So he was saying, hey, this is a great stock. And then, he did a mea culpa April 14th when they filed for bankruptcy. But, you just can't rely on somebody else to do all the research for you. You need to have this stuff at your fingertips and be able to check it. So if you're watching Jim Cramer and he says, hey, EXXI is a great stock to buy, you plug it into your Chaikin Analytics and go, I don't think so, and avoid that. So Peter is one of our financial professionals who's using Chaikin, and I see he's on the webinar. So Peter, that's awesome. And he said Sandy's figured out how to make Chaikin even easier for regular investors to find the really good stuff and concentrate on buying and selling only them. I've also decided to get rid of other services I've been using for years because this one makes a whole lot more sense. So, Peter, we love you. Glad to have you in the Chaikin family, and keep up the good work with using Chaikin. So by now, I hope I've made my promise to you and that you've discovered these 5 simple steps to success so that you can find winning stocks and buy and sell with confidence. Because I always go back to that whole confidence psychology. And if we are not confident, like I was in 2008-09, we're not going to make good decisions. But these tools and what I've just showed you, should hopefully give you the confidence to know that you can do this yourself. And think about where you want to spend your money. How do you want to spend some of those profits you're making? When we went to Turkey, this lower right, 2 years ago, that was all on the profits from Southwest Air. Last year, we used American Woodmark profits to go there for a week. Beach, that looks great. Haven't planned that yet, but that's in the horizon. And Rome, is from some of these earnings beats that I just made recently. Rex here followed the Amazon trade. He is one that took Mark's advice to heart and did a put trade on Amazon before, not tonight's, obviously not tonight's report, but a couple of months ago. And his profit covered his next year total cost of 2 months in Hawaii after taxes. So that's pretty awesome. So we want you to be our next success story so that we can call out your success story like we just did with Neil. And the way to do that is to take advantage of the financial freedom fast track that Chaikin gives you. Here's the stock screener, and as I said earlier, the options play. These are overlays that we've added. Joe will take you into detail on them when you subscribe so that you'll understand how to use them as soon as tomorrow. And another happy subscriber thinks that writing to tell you how absolutely incredible Chaikin has become. It started great, but with the options and screener additions, it's absolutely the best product on the market. And he's recommended it to his friends. So that's awesome. So many of you put in, I can too, or yes, I can. Bill did the same thing after one of my presentations. He said, Sandy affirmed that I know more than I think I do about how to use the tool, and because she's using it successfully with a similar novice background to mine, that I can too. It was a real confidence booster. So Bill and those of you on tonight's presentation, I hope you all share in that same sentiment. So, I mean, if all this system did for you was avoid the pain of owning a stock like a Twitter or an Apple or a Chipotle, who's dropping 26% overnight, I mean, would it be worth it to you? Or if you could profit from spikes like I just did with SkyWest, Citrix, and Knoll, taking 6-8% profit overnight. I mean, is that worth it to you? Um, you can get these types of returns by using the Chaikin methodology. And with the list that we've just gone through today, you've gotten a lot of stock ideas to get started with. But by following these steps, you really will gain the financial freedom to be confident investors and say, yes, I can. But let's just go through some of the additional features on the software. And I haven't even had time tonight, as you can see, and we're over time as well, but thank you for staying with me, to go through all of the things that Chaikin offers. But just pointing out some of the highlights, we've got the options overlay, which give you different option it simplifies the whole options decision-making process. Mark comes out with a weekly report that's invaluable. I mean, if all you did was just read that report and follow those stock suggestions, and he gives you strongest stocks and strongest industry groups and the weakest stocks and weakest industry groups, it's really done for you research. If all you did was use that, you would be well ahead of the game. These coaching calls that Joe and Michelle get on in small groups when you subscribe, and they'll get you on one as soon as tomorrow, when you subscribe tonight. These are invaluable, and these will walk you through the features and benefits of the platform, how to use them. And then if you want more coaching, they'll schedule one-on-ones. I'm not aware of any other software developer that offers one-on-one coaching. I mean, that's all part of the price. There's no extra charge for that. But if you want to go through your own trading methodology and say, well, this is how I look at a stock, how does Chaikin fit into that methodology? Joe and Michelle will take you through that. And then we have a Chaikin Insiders community. This is where Neil and Peter are invited every other week to what we call a forum where they can ask their questions. They'll get updates from Joe on any software additions. They'll get a market overview from our chief market strategist, John Slitch. And those are invaluable too, to keep up with what's going on at Chaikin as well as the market. So added bonuses, the stock screener, the earnings features overlay. You'll also get a daily report with specific stock ideas from our chief market strategist. And brand new is a new sector performance view. I mean, these are all things that I haven't even touched on. But we usually sell this for $1,950 a year. Because you're on tonight's presentation, we're offering it to you for the next 3 days at $1,750. But because we want to get you started as early as tomorrow, when you take action by tonight, you'll be rewarded with an extra $100 off. So subscribe now, if you would, by calling this number, or you can simply go online and the $300 will be taken off the subscription price automatically. But by now, I hope you're all sane. Maybe you can put this into your question box, because I see there's still hundreds of you still on with me, which is great. But just say, I can do this. I can do this, please. And that will conclude our portion. I think Joe and Michelle have been answering the questions as they've gone along, and since it's late now, it's 5:45 here on the East Coast, I'm going to let you go. But I love seeing all these I can do thises. Nanette, Hugh, Todd. This is great. And yes, it is being recorded. So Joe, do you want to add any closing statements before we ring off here?
Yeah, absolutely. So I mentioned to a few people that we do have our webinar program, just like you were mentioning, and we have one more session this week. It'll be taking place tomorrow at 2 o'clock Eastern Time. If you're register in time, if you take advantage of Sandy's deal here, you'll have access to Chaikin Analytics in a matter of just a few minutes. But you can also register for our session for tomorrow afternoon at 2 o'clock. And we'd love to have you join us. Nice little overview before we hit the weekend, and then I'll give you plenty of time to get ready for next week. All right. Well, with that said, we definitely want to thank Sandy for coming out for the webinar. I see plenty of great things coming out regarding her presentation. So thank you all very much for staying with us. We definitely hope you take advantage of her offer, and I'd love to see you on my onboard session tomorrow. In the meantime, have a great evening, and we'll see you tomorrow.
And you can do it.